What is up, everyone? Welcome back to Investing Club. In this video, I'm going to talk about why tech stocks are in a huge bubble right now and why they have the potential to cause another stock market crash. And of course, I don't know if this is ultimately going to happen or not, but it is just my opinion and my thoughts on the future direction of the stock market. And like always, I could be wrong. So the first thing to take a look at is this very interesting chart, the S&P Tech compared to the S&P 500. And what this chart measures is the weighting of the tech stocks in the S&P 500 compared to the rest of the index. And right now what we can see is we've been going straight up on this index since 2008, 2009. And right now we are at levels that haven't been seen really since the dot-com bubble of 1999 2000. So it may not seem like we're in a huge bubble like that, but the tech stocks have been outperforming the rest of the S&P 500 so greatly that we're at levels that we haven't really seen at all since the dot-com bubble, and we all know how that ended when it burst. Another thing we can take a look at is the Nasdaq to the Dow Jones ratio. So this measures the strength of the Nasdaq, which is the tech index, compared to Dow Jones. And the Dow Jones has more industrial companies. You can think of Caterpillar, you can think of 3M, Boeing, McDonald's, those companies, really strong companies that have been around for 100 years. That's what Dow Jones is. And the Nasdaq are the tech stocks, the stocks of tomorrow. So we can also see from this chart that the Nasdaq is outperforming at levels that we haven't seen since the dot-com bubble. And they're really getting up there, especially in the last couple of months when we see the Nasdaq make new all-time highs while the rest of the stock market's struggling. That's really a sign that there is some bubble activity going on here. And so I think this is definitely cause for concern. When you see one index outperform another, like the Dow Jones, by such a large margin, we're going to see mean reversion at some point. And when that comes into effect, we're going to see the Nasdaq probably underperform the Dow Jones for a period of time. Now, I don't know when that's going to come, but the odds are it'll come at some point. Now, here's a very interesting chart that really opened my eyes to how much tech is carrying the markets right now. This chart goes back to 2013, and what you can see is the big five tech companies, which I'll talk about in a second, they have really been carrying this whole market. This chart goes from 2013 to 2017, a big portion of the huge bull market we just went through. And those five big tech stocks are up over 200%, and the rest of the 495 companies in the S&P 500 are only up 26%. So if you take out just five tech stocks from the index, the markets don't look nearly the same. And that huge bull run that we've just had over the past 10 years really goes away when you take away those five tech stocks. This chart goes over 4 years, 26% is only like you're averaging like 6% a year, which is under the market average. So if you just take away the five stocks, this goes from the biggest bull market in history to underperforming the market average. And that is really how powerful these five tech stocks have been. And what are the big tech stocks? They are right here. They are Apple, Amazon, Alphabet, which is Google, Microsoft, and Facebook. And these five stocks make up 50% of the S&P 500. So that's something that's really crazy to think about. If you buy the S&P 500, what you're really doing is putting 50% of your money into these five stocks, and the rest is pretty evenly spread out throughout the last 495. So the weighting on the S&P 500 has gotten completely out of whack, and we've now seen these tech companies, their market caps swell up so much that whenever someone buys into the index, that's where their money is primarily going to, these tech stocks. And that's why I think Michael Burry's onto something when he says index funds are in a huge bubble, since it becomes the cycle where more money is put into these five tech stocks, their market cap becomes larger, and the larger their market cap, the larger percentage of the S&P 500 they take up. And so when more people invest in the index, the more money goes to them. And it's the cycle that's going to keep growing and growing until something changes. And I have no clue when that's going to change. We're clearly in some sort of tech bubble, but we saw in the dot-com bubble, that went on for a lot longer than pretty much everyone imagined. So this is an interesting chart, and I want to pull up the difference between the Nasdaq and the Russell 2000. And so right here I have the red line is the Russell 2000, which is the small cap index. It has 2,000 small cap companies, and the normal candlesticks are the Nasdaq. And this is just measuring the performance since the big drop we had in March. Now, what we see is the Nasdaq has really been outperforming the Russell 2000, and the rest of the stock market, we saw the Russell 2000 dropped more than the Nasdaq, and they didn't recover as much. The Nasdaq has already made new all-time highs. So why is this happening? I think that the Nasdaq is just filled with hope right now, and people are putting their money towards tech stocks because they don't really know what else to put it to. So many companies on the Nasdaq are stocks that haven't been making any money, and they're losing a bunch of money. And so these are stocks that investors pour money into out of hope. They hope that these stocks are going to do well in the future, and so that's why we're seeing this huge run up. PE ratio on the Nasdaq is probably outrageous right now. I don't know exactly what it is, but the PE ratio on the Nasdaq is going to be huge. But the thing is, it doesn't matter to investors that invest in stocks in the Nasdaq, because PE ratio never mattered to those companies. In the Nasdaq, there's so many companies with PE ratios like 50, like 100, even more than 100. And so at that point, valuation really goes out the window. And the reason investors are buying into these tech companies is just because of hope. There's no tangible evidence that these investments will ever make them money, but they see them going up and they see that these are potentially companies of the future, and they put their money into it. Compared to an index like the Russell 2000, which has real companies that make real profits, and it's struggling, and for good reason. A lot of these companies don't know what their earnings are going to look like, and this is an index where earnings actually come into play when valuing companies and the index. And so obviously it's going to struggle at a time like this where earnings are really uncertain for the next couple of years. And that's sort of the main point I want to get across. Companies with real earnings are struggling right now because it's uncertain, but in the Nasdaq, with stocks that whose earnings have never mattered, it doesn't really matter. Investors are going to keep putting their money into them. And that's what's really inflating this bubble right now. And so here's how I think this could potentially play out. I have the charts, and this is back during the last recession we had, the 2008 to 2009 great financial crisis. And what I think tech is doing right now is very similar to how the energy sector was acting during 2008 and 2009. And so right here, the red line on this chart is the energy sector ETF. So that tracks all energy stocks like oil and gas companies, and the candlesticks are the normal S&P 500. And so this was a time where energy stocks were actually doing well compared to the market, unlike now where they're drastically underperforming. But anyway, the beginning of this chart is right at around 2007, where we saw the market start to turn downwards. And what you can see is for the first year of this recession, energy stocks were outperforming the S&P 500. The S&P 500 was actually trending downwards and consistently going down, and we saw energy stocks make new all-time highs. They kept going up and up and up. And I think that's something that looks very similar to tech stocks right now. We've already seen them make new all-time highs off the initial drop. Same thing right here with energy stocks. We saw the initial drop, and then they kept going on to make new all-time highs. That didn't last forever, and eventually energy stocks got completely clobbered. They drastically underperformed the S&P 500 and dropped all the way to a level where they were both down almost 30 to 40%, even though the energy sector was up over 50% before the big drop. And that is something I think could happen with tech stocks right now. We could see a huge period of underperformance against the broader markets, and that could really bring about another leg down of the bear market and another stock market crash. And so is it a guarantee that this will happen? No, it's not. Of course, I don't know what's going to happen, but the concept of mean reversion is a real thing, and it's a powerful force. And eventually we're going to see tech stocks underperform the greater markets. And I think this is what could happen. We haven't really seen a huge sell-off in the tech sector, but once that happens, I think greater markets are going to take a tumble. From this chart, you can see the real damage in the stock market of the 2008-2009 crash didn't really take place until we saw energy stocks take a hit. And so I think that could really happen with tech. The markets are being held up right now with the tech stocks, and once those start to get sold off, I really think it could get bad for the stock market. So this is just all my opinion, but that is potentially how I see this playing out. And again, I don't know how long tech stocks can continue this run. It could go a lot longer, but eventually they're going to revert to the mean, and they're going to underperform at some point for at least some period of time. So I think that's something to always keep in mind, and that is something I'm looking forward to. A lot of these tech stocks are great companies that I wish I could own, but the valuation is just way beyond anything I could consider putting my money into right now. But if we saw this where tech stocks crashed, then I would happily begin to put my money into them. And so that's really what I'm waiting for. I know it might be hard to believe right now, but these insane valuations won't last forever. I'm sure people were thinking that back in 2000, and they could be thinking the same thing now. It's not going to last forever, and eventually we're going to see some sort of fall in tech stocks. Let me know what you think. Am I crazy? Is Amazon going to go straight up to $5,000? Is Tesla going to become the biggest company in the world? Let me know. in the comments, and we'll see what happens. So that's all. If you like the video, hit the like button, subscribe to the channel if you haven't already, and I'll see you on the next video.